Hi, it's Paul Walton from Cherry Creek Mortgage Company. How do you get the lowest possible interest rate on your new home purchase or your refinance? So this is a quick little overview of how to actually obtain and what is actually driving the markets. Keep in mind that the bond market and the stock market both compete for dollars, and depending where investors think they can make the most money, it's either going to flow into stocks or it's going to flow into the safety of bonds when they're fearing that they're going to be losing money on the stock market. What we're actually looking at here is the Fannie Mae 30-year 4.5% coupon. Now this is a coupon that we're actually following that investors are purchasing right now. This is actually the market live on my screen, so you can actually see it. Now before we get too far into this, you're going to notice the difference in color between the candlesticks here, and the candlesticks are used to chart, and they can kind of give us a gauge sometimes as to where the market's actually headed. So if we go back to the 14th of April, you'll see that we actually opened at 101.69 and then dove down and closed at 101.34. So this was a bad day for bonds. Not terrible, but it wasn't a great day. The lower the bond market is, the higher interest rates are, and the higher the bond market is, the lower the interest rates actually are. Now a green candlestick shows us that we opened down here at 101.97 and we actually closed up here at 102.13. So this was a good day. There was a wild day of trading because these big the tail on the end and then the tail on the top shows trading throughout the entire day, and I will take you into that so yeah, you can actually see, because do keep in mind that the bond market and the stock market, while they're both open, they're in constant trade, which is why you can get different responses from different lenders at different times during the day, and I'll actually give you a little bit more insight on that also. So this is where we're at actually today, and we're looking at a 1 month view at this point in time. Our opening at 102.34 and we actually closed at 102.50. So this was a very positive day for bonds, and basically it was driven off of economic news. We had home prices actually dropping 3.3%, and then we had manufacturing drop off the edge, which is not a good sign. So once again, this is Fannie Mae, so this is per conventional loans. Now if you're doing a VA loan or a FHA loan, we follow the Ginnie Mae 30-year coupon. They will mimic each other somewhat, but they are definitely different, and you'll notice that the pricing on this on the chart is actually up to 104 versus about 102 on the other one. So they are similar, but at the same time they are definitely different. So once again, the higher the bond market is, the lower that interest rates actually are. One of the other factors that will definitely contribute to how the market is reacting is the 10-year Treasury. And you will notice there is some similarities. Some people tend to follow this a little bit too closely versus actually snapshotting what the market is doing, depending on what loan they're actually looking to or keeping an eye out on before they actually lock it. So once again, candlesticks, the red ones are not great ones. We opened up here, and if you had caught it early in the morning, that was fine from the previous day, but then at the end of the day we had lost ground, so we had closed down here. So we wound up about halfway down to the previous day, the 13th. And then the next day there was a significant improvement. Not significant, but there was a good improvement here. And this kind of signified that the market was actually a little bit undecided, about ready to pop up, which it did. And then we had a day where we traveled quite a bit, because that's a very long tail. The open and the close was very close, but at any rate, so let's dive into what it actually looks like during the day. So this is the bond market from today, our opening at 102.34. The red line shows where we opened, so you can snapshot that. Anything above it is positive. Remember, as the bond market moves up, interest rates move down. So if you had locked at 6:30 in the morning versus 2 o'clock or 1:45 in the afternoon, it would have been better to have locked later in the afternoon versus first thing in the morning. And keep in mind that if you had made a phone call at 8:30 and then again at 9 and then again at 11 and then again at 12, you would have gotten probably different pricing from different lenders depending on if they had repriced for the better or repriced for the worse. Now we'll go back to, let's pick Wednesday the 13th for grins, and here you can see our opening at 101.15, we'll call it, and then this massive charge up. So once again, if you had locked down here, you missed the reprice for the better at 910, and then you missed the reprice for the better at 140. So that's why it's important to have somebody that actually is watching and being alerted to how the market is actually moving. And then we'll take it one step further, because you want the best, the lowest possible interest rate that's out there. So this is a chart that shows the different lenders and when they've repriced, okay, and then how much they reprice for the better, how much they reprice for the worse at whatever time. So currently we're looking at FHA loans on ARMs. So there was 55 that actually gave lower rates and 7 that actually took some yield spread away, meaning a higher interest rate. If we go to the fixed FHA loans, 76 actually were lowering rates and 11 were actually taking rates up a little bit. And the same goes for conforming. Now there's quite a few on here, so there's 77. I'm just going to quickly scan through these, but this is how it's easy for us to compare who's actually repriced for the better and then who's repriced for the worse. So if we go to conforming, the same basic format, you'll see that 87 versus 10 actually repriced. 87 repriced for the better and 10 repriced for the worse, and at what specific time they actually did that. As you can see, this starts early in the morning and then it progresses. So if you're a little confused by calling around, the reason why is the market's trading until about 2 o'clock on the West Coast. So hopefully that helps a little bit. This also applies to jumbo loans, FHA, and conforming. And now let's jump back a little bit, and this is the 1 month view of, let's go back to the Fannie Mae, and you'll see what it looks like in comparison to a 3-month view. So the last time we were here, and this is April 26th, was pretty much back on March 18th, and so it's a positive run up. At this point in time, how long it maintains it is another question altogether. Market fear, the worst economic news tends to help bonds. Investors will run to the bond market for the safety of bonds versus running to Wall Street to make a quick buck. And if we go to a max view, this you can actually see this is where we're at today. Here's March. The last time we were here was January 10th-ish, and then this is the 4th of November, and this is about when QE2 started from the Fed. And then before that we had a beautiful run up, a little bit of choppy trading, but again rates were at all-time lows basically from August 10 to November 4th. So hopefully this helps. Have a fantastic day. Any questions? If I could add more insight, my phone number is 707-853-3877. Have a fantastic day, and definitely check out the first time home buyer videos and the others that are following it. Thanks.